one. He's Vice President, Blue Line Futures, Oliver Slope. All right, Oliver, let's try to make sense of this. Corn, Mexico, 12.6 million bushels. We're getting the sales, but doesn't seem like the market is moving much on this.
And it's the third straight day that we've seen flash sales, business days that we've seen flash sales. So the demand has certainly been there for the corn market, and which I guess is the silver lining, that we're not searching for demand. The demand is there. So I would imagine that continues to increase as we look for lower prices. Really a lot of weakness in the back half of last week's trade, and that kind of puts us on our back foot to start this week on some very interesting technical levels, 419.5 to 422. That was trend line support from the contract lows and represents the 20-day moving average in December corn. We really need to hold that kind of pivot pocket is the way we're looking at it. Break and close below there certainly changes the technical landscape. And I think looking at this morning's weakness in the corn market, I think a lot of that's probably some potential spillover from the weakness that we're seeing in soybeans, which really was spurred by Friday's bearish reversal. Nothing big came out of the call with President Trump and President Xi. And then over the weekend, we got news that Argentina was temporarily removing their grain export tax. So that kind of entices some producers selling on that. And so a plethora of headwinds for the grain markets to start the week. Next week, we do have a quarterly report, so maybe we get some sort of trade and positioning ahead of that as well.
Okay, last question before the break here deals with the wheat market, and I'm just kind of curious, are we trying to hold some acres at these prices, or really kind of discouraging any further planting?
Well, the wheat market has been kind of a revolving door of disappointment for the better part of the last several months. It looked like we were starting to turn a corner last week. We had 4 consecutive closes higher, which was the longest winning streak since really last December. And now we're working on our 4th straight down day. So a lot of that evaporated, making new contract lows today. I think wheat will be a bargain buy at some point, but global ending stocks are just really high and a tough hurdle to get out above right now.
All right, Oliver, hang on. We'll take a break, come back in a moment. We'll talk livestock futures. Market day report continues in a moment. Higher. Oliver Slopes with Blue Line Futures. We had cattle on feed last week. We had kind of weaker cash trade. And then we have New World screwworm. So plenty here in the headline category.
There is a lot going on, nothing short of new news to start the week, and that's obviously moving the markets. The cattle on feed report, I think you could call it mostly neutral. It was within the range of expectations. The softer cash trade was a little bit weaker, but not anything overly concerning. Then we got the screwworm headlines over the weekend. It's now 70 miles south of the border, which is basically at our doorstep. And it seems like we're at the point that it's a matter of when, not if, it comes into the United States here as we inch closer towards the end of the year. Hopefully it starts to cool down a little bit, and that can help kind of combat it. But nonetheless, we've got a lot of green on the screen to start the week. We're breaking out above some technical resistance in live cattle and feeder cattle. Both of that defined by the 20-day moving average. So for December, that's 236.85. Getting out above there with some conviction, it potentially opens the door for a retest of the contract high near 243.5. So it'll be interesting to see what the cash development does from here. Looking at these ranges, they look really wide to start the week, but we're really just at the 14-day average true range for live cattle and feeder cattle. For live cattle, that's been about $3.70, and for feeder cattle, the average daily range about $6.25. So we're falling right in line with that to start the week.
Okay, and before we wrap up, how about precious metals real quick? 42% year-to-date gain in the gold market, and only bested by silver, up 50%. We're trading at the high of the range, or the high end of the range here on the September. Any final thoughts on precious metals?
Yeah, new contract highs for the gold market, and the overnight trade continues to look very constructive as central banks continue their buying spree there. And then silver, a big move out above $44 today, the highest price since 2011. Back in 2011, silver reached about 49.5. So it'll be interesting to see if we can get out above there and make new contract highs as well, following along with gold.
Oh, there you go. Oliver Slopes with Blue Line Futures. We'll see you again soon.